Artificial intelligence continues to have incredible momentum, which has driven NVIDIA to be the most valuable company in the world. But there are huge risks hiding under the surface for NVIDIA. So I want to go through 5 risks. Those include the potential for revenue to drop. Even over the past decade, there has been periods of times where revenue growth has gone negative for NVIDIA. That could happen in the future. I'll dig through some of the numbers. Margins easily could fall. They are elevated right now because of the pricing power that NVIDIA has. Multiple compression is a huge risk. NVIDIA has lived up to high multiples over the past couple of years, but that may not be the case in the future. Competition is coming in, and of course, customers are very concentrated amongst some of the big tech companies in the world. And those big tech companies don't want to be beholden to NVIDIA for their future growth. So I'm going to go through all 5 of those and give details around what investors need to know. This doesn't necessarily mean that NVIDIA is going to be a bad stock or a bad company in the future, but you need to be aware of the risks in any company you're investing in. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And if you want more from me, check out my newsletter, Asymmetric Investing. There's a link on the screen and a link in the show notes. That's where I'm going through all of my investing research. I do deep dives on every single company that I buy, and I buy stocks every single month. That portfolio has absolutely crushed the market since it started from zero a couple of years ago. If you want to see what I'm buying, check that out. And you should also check out fiscal.ai/ASYM. I'm going to be using Fiscal AI throughout this video. This is the best research tool that's available out there. It's going to give you all of the market information you need, all the financials, transcripts, and there's even easy AI interactions. If you want to know what happened on a recent conference call, if you want to do a simple screener. And oh, by the way, they have 20 years worth of data. So that's made it really easy to go back and pull information from even a couple of decades ago from companies like NVIDIA. I'll show some of that throughout this video, but if you like what you see, go to fiscal.ai/ASYM. Let's get to NVIDIA. And the first thing I want to talk about is their revenue. So here's their revenue over the past 20 years. And you can see that the past couple of years have been the best growth that they have ever had as a company, over 100% growth in fiscal 2024 and fiscal 2025. But there's a couple of things to think about here. First of all, if we look at the trailing 12-month numbers, you can see that revenue growth is decelerating. That doesn't mean that revenue is going negative, that they have negative comps from a year ago. It means that the growth rate has gone from 200% down to about 86%. Now, that's not necessarily bad. An 86% growth rate is a phenomenal growth rate. But what investors need to think about here is that growth going to continue decelerating? And are we going to go through a long-term deceleration cycle? You can see that revenue has gone negative as recently as 2019, even for a short period in 2023. So NVIDIA's business is very cyclical. They typically go through these boom and bust cycles. You saw that here. They had a ton of demand for Bitcoin mining. Here you had more demand for Ethereum. So crypto has been one of the boom and bust cycles. Right now, artificial intelligence is really driving the company's growth. And you can see that here in this chart. I just pulled all of the different revenue segments for NVIDIA. This is on the KPIs in Fiscal AI. So just pulled all 5 of these revenue segments, and you can see that there's not a lot of growth outside of the data center. So the data center, AI, is really driving the company. Outside of that, things are kind of ho-hum, not even back to the peak of where they were in May of 2022. So where revenue could be a challenge is if that revenue growth continues to decelerate. And you have to think about if NVIDIA becomes a company that's growing at 10% or 20%, let's say in 2026, that could be a real challenge for the company. There's a couple of reasons that hasn't happened yet. Big tech companies have been increasing their capital expenditures for data centers, especially for artificial intelligence. So they're buying as many chips as they possibly can. But those companies even are about tapped out right now. They're using almost all of their operating cash flow to invest in capital expenditures. So there's not a whole lot of increases that companies like Alphabet, Microsoft, and Meta are going to be able to put in place in 2026 or beyond. So that growth for their demand isn't probably going to be nearly as high as it was over the past couple of years. Sovereign wealth funds and countries themselves have stepped in, but they don't really necessarily have a very good business model. Even companies like Oracle, who are help building some of the data centers for OpenAI, they have a ton of debt on the balance sheet. So eventually, I think this growth train is going to stop for NVIDIA simply because there isn't enough money to drive the growth that we've seen over the past couple of years for the foreseeable future. So if that revenue growth starts to come down, that's a risk for NVIDIA. But let's also get to margins, because I think this is going to be the really important one to watch. So what I pulled here is gross profit margin in green, operating profit margin in blue, and net profit margin in orange. So this is net income divided by revenue. And you can see that these numbers have been increasing for basically the last 20 years. But the real outlier here is the past couple of years. A 75, 80% gross margin is where we're at with a lot of these artificial intelligence chips. That and operating leverage for the business. Now remember, operating and net margins were kind of between 10 and 20% for years. Going back to 2016, you had a little bit of a spike here when Ethereum and Bitcoin mining were a huge thing. Those operating margins came down in 2023. And now you see a huge spike to levels we've never seen over the past 3 years. So are these margins going to maintain? Is NVIDIA going to be able to have a 50% plus operating margin in the future? I don't think that's going to be the case. I'll get to some of the competitive pressures and even customer pressures in just a little bit. But let's just look at the trends over the past few quarters. You can see that margins, all of these margins that I'm showing here, peaked in April 2024. Over the past year, we have seen those margins decline. The worst margins were in the most recent quarter. So I'm not predicting that these are going to fall off of a cliff, but if we start to see a pullback in capital expenditures in 2026, we'll hear more about that likely next quarter. What are these big tech companies expecting to spend in 2026? If they just say, you know what, we're going to spend exactly what we spent in 2025, that means revenue growth isn't going to be super strong, and likely NVIDIA isn't going to have the power to charge whatever they want for these chips the way that they have over the past couple of years. So these margins are something to keep an eye on because they're already starting to come down. And I think in the future, we're going to see that pricing power that's driven those margins also start to come down. Multiples also could be a challenge for NVIDIA stock. Now, a multiple is just what is the stock trading for compared to its operating results. So the operations could stay exactly the same. Multiples could come down, and that would mean the stock would drop even if the underlying business doesn't change at all. So let's go back through some history here. You can see that the price to sales multiple for NVIDIA going back to 2016 was 3, 4, 5, kind of in that range. Today, we have a price to sales multiple of over 30. So you could have a significant amount of compression in that multiple, especially if you have margins come down. Price to earnings multiple, we kind of see a similar story. Always been an expensive stock from a PE standpoint. So a PE multiple of 40, could have gotten in at something like 18, 19 in 2019. But even right now, price to earnings multiple of 60. So if those two things that I talked about earlier end up working out for the worst, it would be likely that the market is going to say, you know what, NVIDIA doesn't deserve the same multiple that it had when the company was growing at 100+%, and those margins were going up. If we see revenue decelerating and margins coming down, maybe those multiples should be a little bit lower. So for the stock, that could be a huge risk. The fourth thing is just simply competition. Competition is coming for artificial intelligence from a number of different vectors. We know that AMD has been investing in chips. Intel would like to get into the game, don't know if they're going to be a big player. But then we have homegrown chips from companies like Amazon, and Alphabet has their TPUs. Mobile phone companies would like to see a lot of the computing and the inference that we see today go from the cloud to on device. So companies like Qualcomm are working on that. And if some of that inference goes from the cloud to on device, that's going to mean that it's going to be running on a non-NVIDIA chip. Right now, NVIDIA dominates this space. The one company that isn't completely reliant on NVIDIA right now is Alphabet, and they're arguably in the best position today with some of the best models in the world and the best distribution. So other competitors are trying to keep up, and they're doing that by simply paying whatever NVIDIA wants for their chips, but they're also in the background working with companies like AMD or building their own designs to make sure that there is a second, third, fourth source for these AI chips that they need. Eventually, competition always comes for these industries. The margins that we've seen for NVIDIA are not going to be sustainable long term. I think that is clear, especially as cost becomes more and more of a focus for all of these companies. So don't be surprised if competitors start to take a little bit of market share, start to eat into that pricing power that NVIDIA has had for years. So whether this is homegrown competition or traditional semiconductor competition, that is something to keep an eye on. And I think it's coming for NVIDIA, even if none of these other companies are going to be the biggest or best player in the market. We also need to talk about NVIDIA's customers. NVIDIA is shockingly reliant on just a few customers for a majority of their revenue. Again, this is an area where the information you need is really handy in physical AI. I just went into their latest 10Q and just asked this custom AI Summary, what is their concentration and who are those big customers? Now, they don't name customers specifically, but the two biggest customers are going to be Microsoft and Meta, with Alphabet as the other big player there. So one direct customer accounted for 16% of NVIDIA's total revenue. Customer B accounted for 14% of total revenue. Both are in the computing network segment. That's exactly where you see those artificial intelligence demand centers. And two indirect customers are estimated to represent 10% of or more of total revenue. So these would be customers where NVIDIA is selling a chip to another company that's putting it in a rack or something like that. So they're not buying a chip directly from NVIDIA, but they're indirectly buying it from NVIDIA. So you add those four customers together and you get to 50%. Four customers make up 50% of NVIDIA's revenue. Guess what? All four of those customers and every other technology company out there does not want to be reliant on one chip company to make the chips that make their business work. So they're going to do everything that they can to invest in other suppliers, in homegrown solutions, some of those chips that I talked about earlier. They would take away some of that pricing power that NVIDIA has in the market. So that customer concentration risk is a big risk for NVIDIA. And there's really nobody else that's going to come in and replace those big customers. Nobody else has $100 billion a year lying around to invest in capital expenditures. It's just the big tech companies and maybe a few sovereign companies, maybe even some of these neo clouds that NVIDIA itself has actually been helping fund. But there's not a whole bunch of players here in the cloud space that can compete at the scale that those companies are. So that is another risk that investors need to keep in mind. So whether you own shares of NVIDIA or not, the 5 things that you need to think about is what's going to happen with revenue growth, and is that going to decelerate in the future? What's going to happen with margins? Are they going to be able to be maintained where they are today, or is specifically the operating margin going to come down to more historical levels? What is the multiple going to be for a company, especially if revenue and margins are starting to come down? And what's going to happen with competition and customers? Those are the 5 areas that I think investors need to focus if you are an NVIDIA shareholder. The future can be bright for artificial intelligence, but that doesn't mean that one company is going to extract all the value. Right now, that's been NVIDIA, but that may not be the case in the future. So let me know what your thoughts in the comment section below. And like I said, if you want to know what I'm buying every single month, check out Asymmetric Investing. There's a link on the screen and a link in the show notes. I think you'll like what you see there. I've got some new picks coming in the next month or two. So if you're looking for some great investing ideas, it'd be great to join that community. And of course, check out fiscal.ai/ASYM. That'll give you 15% off. Try out their pro version for free. And like I said, enterprise solutions, which is what you saw here today, 20 years of data, these artificial intelligence questions, just very, very easy to get the answers that you need. So a tool that I'm using all the time. You'll see more of that here on Asymmetric Investing. Thanks for watching, everybody. See you here next time.